HMO property investing or single buy-to-lets? Which one's best for property investors? Well, if you invest in HMO property, you'll make more cash flow than single lets. But there's a lot more hassle involved, a lot more work involved, and a lot more regulation attached to HMO property. But what if I were to tell you that you can actually achieve the same high cash flow of HMO property with the low hassle workload, if you like, of single lets? Well, that's what I'm going to share with you in this video, so stay tuned for more. Hi, my name is Ranjan Bhattacharya. I've been investing in property for 30 years. You may have seen me on Property Elevator, the hit show on Sky TV, or you may have attended one of our Central London property networking events. Now, I've been investing in property for 30 years, as I said. I've been investing in HMOs as well. We've got more than a couple of hundred rooms, so I've done all that. I know what that's all about. But if you're looking at property investing today, what's best? HMO property or single lets? Well, a lot of people go for HMOs. That's houses in multiple occupations. But houses in multiple occupations aren't without their pitfalls. When I got started with HMOs back in the 1990s, there wasn't so much regulation attached to the whole sector. And of course, regulation means you have to comply with the regulation, and that adds to your cost. Now, I've done a whole video on the pitfalls of investing in HMOs, and I'll put a link to that up there, and I do recommend you watch that afterwards. But in this video, I want to share with you how you can have your cake and eat it. You can have the high cash flow of HMOs, but have the lesser workload and lesser costs, if you like, of running single buy-to-lets. So let's crack on with it with the help of the board. But first, if you're new to this channel, make sure you subscribe and hit the bell icon, because we put out new content each and every week, all dedicated to making you a successful property entrepreneur. Also, smash that like button. Really means that more people see this video on YouTube. So when people get started in buy-to-let, they often just let single units. And this is what I call vanilla buy-to-let. So you might have a flat or a house, and you're letting that to one tenant or a family under one tenancy agreement. An HMO is what we call a house in multiple occupation. So you take the same house, but you will split it up into a number of rooms, and you let out each room to a separate individual under a separate tenancy agreement. So it's multi-let. Now, the great thing about HMOs, of course, is more dosh, more cash flow. You will get more for the property overall than if you were letting it out to one person under one tenancy agreement. It's basically the principle that works in everything in life. If you take Coca-Cola, for example, the most expensive way to buy Coca-Cola is in the little cans you get on aeroplanes per milliliter, but the cheapest way to buy Coca-Cola per milliliter is in a 3-litre bottle. So this is the equivalent of the 3-litre bottle, and this is the equivalent of splitting that Coca-Cola up into the mini cans that you get on the aeroplane flights. Now, with single lets, of course, you've basically got one tenant, one AST, one tenancy agreement. The tenant is responsible for basically paying all the bills, the council tax and all of that sort of stuff, and they let the whole property off you for a period of time. And apart from dealing with repairs and that kind of stuff as a landlord, you don't really have too much to do with that tenancy. HMOs, on the other hand, each tenant is just letting one room. And in that house, there is shared communal spaces. For example, all these tenants occupying these individual bedrooms may share toilet facilities, bathroom facilities, kitchen facilities, hallway, stairs, landing, and all the rest of it. And that is up to you as landlord to maintain. So with single lets, you don't get involved in doing anything internally apart from repairs during the course of the tenancy. With HMOs, you have to get involved in things like regular cleaning of communal areas and the like. Usually with HMOs, the landlord will do all the paying of the bills such as council tax, such as water, and even utilities, and basically giving the tenants an all-you-can-eat buffet, one price rate for the room, which includes all their bills. So yes, you can see there's more cash flow than single lets, but there's a little bit more admin, there's a little bit more cost to take into account, and responsibility for upkeep of communal areas and the like. You also have to get more involved with your occupants, making sure they all get on. And, if you've got 2 occupants on a single let and one guy nicks the other person's cheese out of the fridge, that's nothing to do with you, Gov. But in an HMO, if one of the other tenants have nicked someone else's food out the fridge, you might be getting a call, and that's an issue that you have to deal with. Now, back when I started doing HMOs in the 1990s, there was relatively little regulation around the whole area. Now, as time has gone on, there doesn't seem to be a year that's gone by without more and more regulation heaped upon people that operate HMOs. The problem with the regulation is that to comply with it increases your costs. Now, there are plenty of new things that we're particularly worried about, which are coming very, very soon. One of those is council tax banding. With a single family let, of course, there is just one council tax for the whole property. But these in the council, you know what they've gone along and done because they want to pay for all their gold-plated pensions and their fancy town hall offices and all of that? They're now coming for you for individual council tax for each room. Band A, folks, and that's coming to more and more areas. But what about this, folks? What happens if I can get you this extra cash flow from a property, but with the hassle and management effort of a single let? Well, that's what we're going to talk about next. If you're enjoying this video, don't forget to smash that like button, because it means more property investors will get to watch content that we put out. And if you haven't already done so, subscribe, because we put out this sort of content each and every week, all to keep you on top of your property investing game. So you may remember in a video I did a couple of weeks ago, I told you about this little property purchase of a commercial mixed-use building that we picked up earlier this year. Link to some of those videos are up here as well and in the description below. So what we've got here is 2 shops and the spaces above. Now, the space above is currently an office. Now, what a lot of people are doing with commercial to residential conversion right now is that they're going ahead and saying, okay, let's take the space above and make it into a giant HMO. Now, if you did this, you could get 6 HMO rooms up there in that space. Now, that is something you would be able to do under permitted development. That means you wouldn't have to go for full planning permission. It's very, very light touch kind of planning regime. So currently, this space up here is actually an office space, an office above the shop. So there's a permitted development right that allows you to convert this into residential, and then you can make that residential unit into an HMO, provided it's not more than 6 rooms. So a lot of people would look at that option. But quite frankly, I think that's balmy. I don't think that's the way to go with property like this, for all the reasons that I mentioned before. But also you've got to think about your exit route. When you want to pack up or do something else, what do you do with a big HMO unit above a shop? Now, it's not going to sell to an owner-occupier or a family because it's typically not the space that they want to go to. So your exit route, if you've got a giant HMO like this, is usually to sell it to another HMO investor. Now, the truth of the matter with HMO investing is that most HMO investors tend to build and make their own HMO units because you use all the Brewer method, if you like, to buy cheap and renovate and add value, refurbish, rent out, repeat, and all that sort of stuff. You don't tend to buy a ready-made HMO because why? Because it requires a lot of cash. And if you're an investor that has a ton of cash, there are better things that you can use your funds for to get a lower effort return than sinking it into an HMO type proposition like this. So that's one of the reasons why exiting from HMOs is notoriously difficult, because the buyers tend to be investors and they want a pretty good damn deal in order to take that off your hands. We'll get back to the video in just a moment, but what I wanted to really tell you about was what is the most exciting opportunity in property right now, and that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities, and that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video. So instead of going down the HMO route, what we've done here is actually split this unit up into 4 one-bedroom flats. And that is all done under permitted development. It's a very, very simple regime for permitted development. It's a 56-day process to submit your application. You pretty much, if you know what you're doing, you know whether you're going to get the permission or not. You basically get the permission, you're free to crack on. So if you did do this as a 6-room HMO, you would make slightly more gross rent than if you did it as 4 individual 1-bedroom flats. But here are the massive, massive advantages. First of all, each of these 1-bedroom flats are on a separate AST. The individual tenants are responsible for all their own bills and all their own council tax. The other thing is that each property, each unit, will be occupied by a single person or maybe a couple. And in most areas, none of this will be licensable as an HMO. So you won't have the license compliance issues there. You don't have the communal space issues so much, places to clean and that kind of thing. So the overhead of managing the HMO is just simply not there. But the key difference is the end game, the exit route. Now, your exit options are basically hard if you have got a giant flat above a shop. But when you've got 4 one-bedroom flats, your exit route is relatively easy, because basically 4 one-bedroom flats are the type of flats that appeal to first-time buyers. There's always a plethora of first-time buyer incentives and schemes that are out there, often backed by the government to encourage first-time buyers to buy. So there is usually plenty of demand for first-time buyer stock. Now, I've done an earlier video where I've contrasted owning flats or houses for buy-to-let investments. And of course, houses do make a lot of sense because you own the freehold. And watch that video at the end and you'll get an idea of what I was talking about there. But one of the issues with owning flats is, of course, the service charges that you have to pay to the freeholder. But when you do a building such as this, so when you do a commercial to residential conversion, of course, you have the whole freehold, and you're the one that is the freeholder. You're the one that has split the units into individual flats. So as such, you're responsible for keeping the upkeep of the building, and therefore you have control over that service charge. And that's the bit that's very, very important, because when you're buying leasehold flats where you don't have that element of control, those sort of costs can quickly run out of control and eat into your profit margins. So of course, what you've ended up here is not an HMO. You've actually ended up with what we call a CMO, a commercial building in multiple occupation, CMO. Because in this one building, you've effectively got 1, 2, 3, 4, 5, 6 tenancies. So as you can see from this drawing, what, if you can call it a drawing, you've basically got an HMO by a different name. You've got something called a CMO. CMOs don't have HMO licensing regulations and all of that sort of flannel that you have to deal with when you're dealing with HMO. What you've ended up with is a mixed-use, multi-unit building with no additional licensing or regulatory compliance issues. And that's why the savvy money and the savvy property folks are switching out of HMO investing into CMO investing simply for that greater control and flexibility and lighter touch regulation and less management cost of having multiple cash flows from one rooftop. Now, the great thing is that doing this sort of stuff is actually getting easier. Now, in 2013, the government introduced a whole bunch of PD, permitted development rules, which made doing these sort of conversions very, very simple. It's not a planning process, it's very, very light touch. They call it a prior approval process. There are a new set of rules which are introduced August the 1st, 2021, which go even further and make it simpler to do these sort of conversions on a far wider range of building types. And there are consultation papers currently that have been put out by the government which are set to make this process even simpler still on some commercial property types. Now, this is big stuff, and if you want to be savvy in 2021 and in the years ahead, you want to be moving away from HMOs and into the CMOs. And if you want to find out a lot more about doing this, how you can find these sort of sites to do these sort of conversions with, if you want to find out more about the permitted development rules that you can take advantage of, which allow you to do these conversions with very, very light touch planning regulation, and you want to find out more about how you can manage these sort of buildings without all the hassle of having HMO buildings, then I've got a special webinar, a 90-minute masterclass where I'll introduce you to the whole gamut of doing this sort of exciting stuff. So join me on that. The link is in the description below and it's on the screen as well. Hope to see you there. See you guys in the next video. And if you haven't already subscribed, why ever not, smash that subscribe button, hit the bell icon. We'll let you know when we next upload a new video. See you guys soon.